I'll say something maybe a little controversial. It shouldn't be easy to buy a home.
Hi, everyone. Welcome to Housing Insiders, the podcast for founders, builders, lenders, and regulators, and anyone who believes that everyone should be well housed. I'm Jonathan Lawless.
And I'm Jeremy Potter. On Housing Insiders, we're hosting the conversations you won't hear anywhere else about how to make housing more innovative and attainable.
And we're absolutely proud to partner with Built Rewards to bring you these smart conversations. But if you have an idea for a guest or a show or have interest in sponsoring an episode, please email us at podcast@thehousinginsiders.com. Okay, given where we are today, I know that listeners are going to be really curious about how the Trump administration plans to deliver on its housing goals. And I promise you that in the coming episodes, we're going to bring you some really, really interesting conversations with some fellow insiders who are going to help us break it all down. That includes, I'm excited to say, Ivy Zellman of Zellman Associates and a good friend of mine, Hugh Frater, the former CEO of Fannie Mae. So I promise you will want to stay tuned to Housing Insiders.
That's right, John. Two of the best at looking around the corner for what's to come. And that brings us to today. Today's episode, we're excited to talk to a founder, Landy Liu, the founder of Foyer, a savings platform for first-time home buyers. Before Foyer, Landy worked at Better.com for 4 years as general manager and then director of financial products. That's actually where we met when Landy was at Better. Landy brings a background in finance, having worked at Credit Suisse, graduated from Wharton. Landy, welcome to the show.
It's great to be here. Thanks for having me.
Awesome. Well, Landy, just to kind of get started, I guess the obvious place to start is just to hear a little bit about Foyer, what it does, how it helps consumers plan for homeownership.
Yeah, sure. At Foyer, we recognize a few truths about this generation of aspiring homeowners. The first is that it's really difficult for them to save for a down payment. That's usually the number one barrier to entry. The second problem is more qualitative, and that is younger millennials, aspiring Gen Z home buyers. They don't even know how to get started. It's a complicated purchase, and it's an intimidating purchase. And those two things are both important principles that we're trying to help address with our platform, helping people understand those initial steps to homeownership. So we think of ourselves, and we named the company Foyer, to be this entryway to homeownership that's serving as this on-ramp. And what we've really latched onto is this message that no matter how you buy, where you buy, when you want to buy, you're going to need to save something. And that's one thing that most people understand without question. You have to start with saving something. And it's up to us at Foyer to help people understand how much they need to save. And so for this user base, we know that if we keep things focused on this dream of home, create a whole product experience around navigating to get you home, we can keep people focused. We've learned a ton about the behavioral science and psychology of consumers, but it all starts with keeping people focused on this dream of home and allowing them to action real steps towards it.
I mean, keeping this generation focused is something that I think everyone struggles with as they're distracted by every form of social media. So I want to come back to that, but I'm actually curious, Landy, because I actually don't know this. Give me your sort of backstory as to why you started the company.
Yeah, thanks. I was at Better.com between 2018 and 2022, which for anybody that's been in the real estate space during that time, that was a really remarkable time. I joined as one of their first members of their capital markets team as the company was really beginning to scale and their platform started to take off. Better.com is a direct-to-consumer mortgage business. It's tech-enabled. It created an amazing user experience to help that consumer navigate the pieces of mortgage origination in a more user-friendly way, in a cost-effective way for the company. And while I was there, I witnessed a refi boom primarily. Right? We saw a huge amount of interest, and Better.com did a tremendous job with refinancing. It's a tech-enabled company. It's pretty clear to both the user and to the company what pieces are required to actually get that refinance, what documentation. It could be scaled really, really well. Where I saw more and more challenges in terms of the home origination process was in that purchase business. I witnessed just how difficult it was for primarily first-time home buyers to use the platform. They needed an extra set of hands. They needed more attention. And by the time they arrived to better.com, oftentimes they had misconceptions about how much they needed to save for a down payment, what closing costs were. I remember even watching first-time home buyers at the company being surprised at the closing table. At the very end of their transaction, being surprised at how much was going to be spent on title, on escrow, and that surprise shocked.
I wish I was surprised by that, but I honestly, it's it's depressing. I mean, how confusing it is, and
it is, and it's a shame that so many Americans find out about the costs of homeownership after they already have their home under contract and they're at the closing table. And all of those experiences really left an impression on me. I left the company in 2022. I was actually planning on buying my first home that year. I had been in the blitz of scaling better.com, and I simply wasn't really in the right mindset or stage of my life. And so I actually started my home search at the beginning of that year, the year where mortgage rates started to climb. It was that year that mortgage rates doubled. And so, like so many Americans, young Americans at the time, I got a little bit of a sticker shock in terms of my mortgage rate. It started in April and it began to really accelerate. So in the middle of my own home search, my mortgage rate increased almost 2 percentage points. And I decided, from the learnings at better.com, from what I was seeing as a home affordability crisis beginning to unfold, as a mortgage person, I knew this was going to be a problem. Affordability for the sector that I care about, first-time home buyers particularly, I decided to actually start Foyer that year and that summer. I did not purchase the home, and I used the down payment to initially finance Foyer.
oh wow,
Oh, wow.
That's amazing.
Yeah, that's a true founder story right there, Landy. That is amazing. So, since we're on the topic of cost and money, how does Foyer approach cost? How does Foyer approach revenue and making sure that the people who need it are getting the most help?
That's such an important point, Jeremy. We've seen a incentive problem in the industry. The people that need the most attention, the most handholding, are the least lucrative for companies to serve. Mortgage companies, real estate agents, the broader industry at large is not incentivized to spend that extra hour, 10 hours, if it takes someone that long to get over that hurdle when somebody else is ready to go. So Foyer's been really focused on this pre-transaction journey. And the way that we think about doing it cost effectively is primarily through technology in a platform that can scalably serve the same segment really efficiently. That's why we've been really focused on the first-time home buyer. We are focused because it's not just part of our mission, but because the first-time home buyers tend to have the same behaviors. And we can build products and services that are geared towards answering those questions and facilitating those behaviors at scale.
So I have to admit to some skepticism here on the model, just because for a couple of reasons. Like, one is that, if you look at companies like Mint or other budgeting types of technologies or other things along those lines, generally what you see is there's a bias of the type of people that are going to use those things. And that bias is that people that are thoughtful, care about that stuff, are going to be the ones that are going to gravitate to those products. And then they end up not really being the type of person that really needs it. Like, what you need to do is convince somebody who otherwise would not have used a product like that to use the product. Because ultimately, like, the idea of savings is just a really boring I mean, even I like my eyes get, I just get tired of having to think about like managing my finances, right? And all of that I say just because I do think that you have a magical thing that you add to the platform in some cases, and I'm curious to know how much value you ascribe to it, which is some states offer a tax benefit to saving for a down payment, and even outside of that, you're offering matches, like you're doing something to incentivize people to enroll. And so I'm just kind of curious, in your mind, the role of those things to get people that should be using but otherwise wouldn't be using your product.
That's a great question, and I think you and I share an appreciation for rewards. we know rewards work, and
Absolutely.
I've been a big fan of Built and a customer of Built, in fact. And what we've learned about our user base is that if the act of saving for a home or in general is boring, you have to use various incentives and moments of delight to get someone focused on this transaction. Push people, incentivize people towards homeownership. And so there's a few things that we've done that have worked really well for us. The first thing we did was decide very early on, we are not Mint, we are not Rocket Money, we are Foyer, and we are only here for one thing and one thing only: homeownership's savings. So every dollar in Foyer is to be used towards a down payment or closing costs. It's very explicit in the journey, in the customer journey. Don't join Foyer expecting rewards for a car, for a new TV. It's going to be a long-term goal, much longer-term goal than what you probably have your other accounts for. Another thing that we've done, we were inspired by 401ks. We were inspired by other tax-advantaged accounts. You mentioned that the tax savings that are available in certain states, those are really important for us, both in terms of the actual benefits we provide to our customers, but also in the brand. We've looked at these tax-advantaged savings accounts as a parallel to other types of accounts that exist, like 529 college savings plans, like healthcare savings accounts, like IRAs and 401ks, like I just mentioned. And each of these products have some incentive, whether it's tax advantages or, in the cases of a 401k, a match. I remember when I was going through my time at Credit Suisse as an analyst, I maxed my 401k out every time I could get. Because somewhere in the back of my mind, my mom said, max your 401k. And the company said, max your 401k. It's free money. And it never left me. And when I was going to purchase that home in 2022, I had all this money in a 401k. And I went, man, I really could have just used that for the home. I really would have liked to use all this liquidity for the home. But it wasn't liquid. And so for us, we've been inspired by matches. We use a match at Foyer, in addition to the tax benefits, to incentivize people to think long-term. Our match is relatively small, but it works. It's between 2 and 5%, depending on the membership level. Meaning if a consumer deposits $100 into Foyer, Foyer will actually match that deposit between $2 and $5, which can be used towards your down payment, but for nothing else. It has to be used for the down payment.
Can you just talk a little bit about what you've learned from tracking those state tax programs or tracking the other incentives that would be needed for Foyer to unlock even more savings and match for your customers? Like you mentioned the state tax benefits, so that got me thinking about the federal tax system, but now Congress is involved, so it's like, forget that. It feels like, to a large degree for many of us. So I'm just curious, like, how, when you talk about this alignment of incentives, it doesn't feel like there should be that many barriers the way we just described it, but yet there are. And so what have you learned, I should say, from that experience?
Yeah, thanks for the question, Jeremy. We're surprisingly perhaps up against a lot of interrelated political, economic, hurdles in our mission. But we think that there's a lot of opportunity. If I had a magic wand, I'd say creating a federal tax incentive for saving for your first home. If you're a first-time home buyer, first-generation home buyer, that would go a really long way. If we were targeting this first generation or first-time home buyer seriously, I think we could make a big difference. And it's not just the industry, our industry, but bringing along other industries for the ride. That would be really meaningful. In the same way that 401ks, they didn't just incentivize the consumer, they incentivized the company. And we need to do more to incentivize others to partake in homeownership. Our view on tax advantages across states, early on in our journey, we raised a little bit of money in 2023 from venture capital. And venture capital, is always trying to think about how big is this market opportunity. And so many investors asked me the same question. What's the deal with these tax advantages? Where are they? How are they moving along? And so we did an analysis, actually, with the help of some friends over at Detroit Venture Partners, where we looked at every state and we tracked the legislative cycles of some of these benefits. And there's another 10 states that have this somewhere in their process, their legislative process. And somewhere along in that analysis, we were surprised, in that time frame, Canada went federal with tax-advantaged savings for homeownership. So that was a huge testament and signal. And needless to say, I think the timing was great, and so we were able to raise a little bit of financing on the heels of that. But the thing that I was left with through that process was that we just simply cannot bet as a company, we cannot bet on policy changes. We look at all of these as upside, but we have no idea, we have no control over when or if another state is going to go live, or if the federal government's ever going to push anything through. And so our view is try to find as much money as we can get for the consumer. So lately, what we've done is partner more with the industry, with mortgage companies, with realtors, partner with down payment assistance, education, counselors, and really use our platform as this journey that can help the consumer find money, whether it's through the policy changes that are to come, or through tax advantages that already exist, or just simply through helping consumers navigate existing programs that are just hard to find eligibility for and be aware of.
Yeah, that sounds right. Don't count on it, but if it happens, it's an accelerator. But the business moves forward, and the savings and the solutions move forward regardless. Yeah, that makes sense.
Yeah, it's smart business thing. I mean, I just to say it very clearly, though, I mean, a tax advantage savings account at the federal level would be an incredibly valuable thing for homeownership. And I sort of look at proposals like $25,000 first time homebuyer credits and just think, well, if you, instead of doing that, use, that kind of spending just out of taxes to incentivize savings, but how much more powerful a tool would that be? Because now you're not just giving away money, you're encouraging a good behavior, which is savings, which is going to benefit us economically. The home buying process benefits us economically. So it just seems like a much smarter way to spend money on home ownership.
I'll say something maybe a little controversial. It shouldn't be easy to buy a home. As the founder of a company that's mission oriented to get people to home ownership, I see hard work. I see a lot of hard work, and I'm inspired by the hard work of our members every day. The sacrifices, the little sacrifices our members make. I was talking to a member who told me that he's foregoing a group trip, a vacation that he goes every year on with his friends because he has this goal of buying a home next year. And he told me that he was so thankful that he couldn't actually easily access his funds in his Foyer account. It was separate from all of his other accounts, and that he could just set it and forget it. And he's not going to go on that trip, even though it hurts him. because of this bigger goal, and a goal that he knows is going to last benefit for generations to come.
I mean,
And
that's inspiring.
when
That's
we think
inspiring.
about it,
Yeah.
when we think about the tax, the way that we're doing is we need to focus on good behaviors, not free money. It's about good behaviors.
Yeah, it's interesting to me that people think it was so easy to buy a home before, and now this generation's cursed. And I don't really know if there was a time in which it was easy to buy a home. Maybe a brief time, but we all saw how that kind of ended. So let's take a quick break. I want to come back because you mentioned some venture funding. I want to come back, to a few points on your business model, just because I think you're the first sort of venture-backed company that we've had on the show. So I'd love to explore that a little bit. So, but let's quickly hear a word from our sponsor, and we'll be right back. This episode is brought to you by Built Rewards. Built is a rewards program, just like an airline program that is centered around your home and neighborhood. But instead of earning miles for flying, Built rewards you for paying rent, no matter how you pay. As a member, you can earn points at over 20,000 local restaurants, local merchants, and those points are now the most valuable rewards currency. You can use it to book travel, on Amazon, or even towards a down payment.
Built is revolutionizing housing. If you want to learn more, email John at lawless@builtrewards.com. Welcome back to our conversation with Landy Liu, founder of Foyer, a savings platform for first-time homebuyers. This is a great platform. Check it out at foyersavings.com. And we were jumping back in, talking about how you were thinking about, structuring and funding this business. So, John, why don't you kick us off with your question?
Yeah, I mean, I guess the one thing I'm always curious about is what the revenue model is for the company. So, like, are you thinking subscription based? Is it referral based? What's the revenue model that you're considering?
Yeah, we are early in our journey. We have a few different revenue sources today, and over the next year, we think that there's one particular source of revenue that will begin to grow pretty dramatically. We do have a subscription-based product. Ours is freemium, so a large percentage of our customers are using a free version of Foyer. And if you are on the premium version, you get additional benefits, a different product experience, and you're paying some monthly fee. At the end of the day, what we also realized when it comes to our customers and our mission is that we're adding a ton of value to not just the consumer, but also to the industry. And the work that we're doing is valuable to the consumer and to the entire ecosystem of real estate at large. And so when we think about where we can realize value for the value we create, we also realize that we can also get some value from the service providers that are ultimately in this kind of chain. And so where we're beginning to think about other sources of monetization are in the fact that our customers are extremely well nurtured. They're extremely high intent. We have a very, very clear line of sight into when they're going to buy a home, how much home, where. And if we can demonstrate that there's value in our platform and our customers, we believe that we can also derive some value from lenders and agents and the rest of the ecosystem. And it's not just because we think because there's a lot of potential in economics there, but rather we don't want to overly burden our customers as well. And so if we could create value through other means, it also means we can maintain a freemium model. We can have more customers use our product without having to pay for it. And that's really where I'm focused on right now is proving over the next year that we can generate more value from other sources outside of just the customer.
Yeah, I love that because we have very few examples where the customer gets to benefit from their own value as a lead or their own value in the intent that you mentioned. And so you've kind of created this opportunity where Foyer gets to say, we can help you essentially monetize your own lead gen, the way this industry is built.
Yeah, I mean, for the lead to have value, though, I mean, ultimately, I mean, you need to get leads, right? So, I mean, a lot of these models that are looking at subscription-based or referral-based incomes, like, are really kind of capitalizing on the fact that they offer something that's going to bring in people potentially before they make those decisions, which, obviously you're thinking about. So what about distribution? How are you finding consumers to join the platform?
Yeah. We started our company in 2022, launched the first version of our product in 2023. We have about 12,000 members today across not just the tax advantage states, but also outside of those states. We're seeing roughly a third of consumers joining from organic referrals. We got our start by being a little bit scrappy here. We partnered with influencers that we saw were financially savvy, who were focused on saving or on credit cards or on other types of financial assets, but didn't currently own a home. And we simply created a Foyer account for them, put some down payment rewards in it, and said, if you talk about it, this is yours. Here's $5,000 towards your first home. But it can only be used towards the home. And so we got really scrappy with that. And that's really where the first several thousand folks came from, is a few influencer partnerships.
That's brilliant. I mean, unfortunately, when they go to get underwritten for a mortgage, it's going to be a shit show. Like, what do you do for a living?
Yeah.
No, I love that scrappiness. I mean, honestly, that's even a scalable way to get to large audiences these days, which is really cool.
It's a wild west in that area. We don't want to only rely on influencers. We don't know what's really going to happen with, like TikTok, for example. Who knows what's going to happen with that platform? But where we're heading is more and more partnerships. We started partnering with companies this past summer, and so we actually are offering Foyer as a benefit, kind of similar to the 401k model. We're still early there, but we have a few companies that are offering this program to their employees as a homeownership benefit.
One of the things you mentioned earlier as we were talking about the magic wand and the federal tax advantage system. So putting that one thing aside, is there something else you wish existed? Is there a number one problem you wish another founder was working on that would help unlock your business or the homeownership journey that we've been talking about, that industry members should know about, VCs should know about, other aspiring founders out there should know about? What kind of tools, solutions, partnerships?
Well, that's a great question. And there's so much wood to chop here. So where my head goes is there's really kind of three components to buying a home, right? There's credit, there's income, and there's assets. CIA. I've always used kind of that terminology. And we are focused on the A, right? That's really where our core competency is right now. And as a startup, we really are not trying to overly spread ourselves out. There's a need for the C, the credit piece. There's a need for the income and debt management side. And I think we're extremely favorable to companies that are doing either of those through the lens of homeownership. And we would be eager to partner with companies that are in those spheres.
That's awesome. What surprised you in terms of what you're hearing from people that you weren't expecting to hear from people that are thinking about savings accounts, and you sort of seeing it? And then I guess sort of to add on to that, maybe a last thing is what would you say to a young person who thinks, I'm never going to own a home, I shouldn't even think about it?
To the first question, I wasn't expecting that people would be so focused on this goal without us convincing them. We early on thought we needed to design the product to be as favorable to the user as possible and convince them to buy a home, to sell that dream. And what we've learned is people are coming to us because they already have that dream, or they have this inkling of a dream and they just want it to be concrete. And we don't need to sell things like, oh, you can withdraw from our product without penalties. And you can, we didn't need to position ourselves as a savings account even. What we realized is people are motivated. And if you give them the tools and the structure to express that, it'll work. And so our product is actually not as liquid as a traditional savings account. It's not as liquid as a Mint or other types of products. And we realize that's actually what our consumers want. They want something that's different. They don't want a better savings account. They don't want a better checkings account. They want something that's like new and unique and that they can't just dip into when the going is a little bit, tempting. And so that's one thing we've learned is like, this is a new space and we need to be, ourselves here and appreciate that people want something somewhat new and they're motivated through other reasons. And what I would tell the next generation or someone that's aspiring but is a little unconfident is that you're not alone. We see this every single day. It is the worst kind of branding moment in real estate history. So many people are deciding not to become homeowners. They're losing the will. And that's what pains me the most is when I see and hear people give up. And to me, what Foyer's real product is confidence. It's not a savings account. It's confidence that you can own a home one day. And the difference between a renter and a future homeowner is someone that believes that they can and that they're working towards it. And we all know on this podcast and all the listeners that homeownership is the best way for Americans to build wealth. And I would say to that young person, get started. It might take some time. It might take longer than in generations past, but it's still one of the best ways to build wealth and secure your future for generations to come.
Great message. Awesome. And I guess you'd probably also encourage them to download Foyer, go to foyersavings.com, leave a 5-star rating, go download the app. But honestly, for those who are listening, who are interested in what Landy's doing, I think, a huge way you can help him out is just, even if you're not going to use it, download the app, rate it, tell your family members about it, post on your various channels. Let's get the word out. I think it's an incredible product.
So my name is Gui de Araujo. I currently live in Metro Cincinnati. I moved to Cincinnati for work originally and then met my wife. And my wife and I got married and we wanted to buy a house in the area. So that's how we kind of came about finding Foyer. But we had been saving, and saving quote unquote, because these savings were being used to fund, travel as well. But we had savings, we're fluctuating for about a year and a half. Then I found Foyer. That certainly that committed us to the home process. But from start to finish, I want to say the process took 6 months after, once we committed to joining Foyer. We finally have a home. And it's something that makes me really happy about. It is a great place to be finally, just to feel like it's possible. And that is a nice thing to feel.
And that's Gui de Araujo with a sneak peek at the future of the home buying process. Just like Foyer figured out, it all comes down to the app.
That's going to do it for this episode. To all the listeners, we'd also like to hear from you. So please, send us an email at podcast@thehousinginsiders.com. And of course, if you like what you hear, leave us a 5-star rating or leave us a review. Super helpful.
And don't forget to subscribe to Housing Insiders on your favorite podcast network, and we'll come back with more in our next episode.